big moment has arrived. First you learn how to walk, then drink from a cup with no safety top, then you speak in complete sentences. Next thing you know, you're searching for dividend stocks on YouTube. Why dividend stocks? Because you want to get paid for your investment in the company.
You smart.
You know how to make that passive income, you just don't have enough time to do your research, and that is why you are here. Today, we will try to point you in the right direction. I was driving today and thinking about my new investments for 2021, and I decided I want to add new dividend stocks to my portfolio, so I started doing some research. What's up guys, welcome to Glory Investing Show. Today we will talk about discounted dividend stocks for 2021. S&P 500 is running at an all-time high, Dow Jones is above 30,000, and it is getting difficult for valued investors to find discounted stocks, so we prefer dividends over anything for 2021. Before we start, I would appreciate you guys destroying that like button so we can reach more investors to see this cool video. We talk a lot about dividend income and passive income on this channel, but every time I want to add a new stock to my portfolio, I see this. I spent hours doing some research, reading some financials, and I chose these 5 dividend stocks to buy in 2021. Enterprise Products Partners. Enterprise Products Partners LP provides midstream energy services to producers and consumers of natural gas liquids, crude oil, petrochemicals, and refined products. The company operates through 4 segments: NGL pipelines and services, crude oil pipelines and services, natural gas pipelines and services, and petrochemical and refined product services. With a market cap of $43.352 billion, their stock price on December 26th of 2020 is $19.86. As of January this year, their stock dropped more than 30%. That is making them a perfectly discounted stock with a 52-week low of $10.27 and 52-week high of $29.22. This company is paying quarterly dividends. Shares currently yield a hefty 8.82%. While there have been concerns about that sky-high yield, the dividend looks safe for several reasons. To begin with, Enterprise Products Partners is generating enough cash to support dividends. Also, Enterprise has increased its dividend every year for the past 21 consecutive years, with the last increase in January 2020. Enterprise stopped quarterly dividend increases after the first quarter of 2020, but I'm not ruling out another hike, even if small, in the near future. Enterprise operations are largely fee-based and not as vulnerable to failing oil prices as those of oil producers. Enbridge. Enbridge Incorporated is a Canadian multinational energy transportation company based in Calgary, Alberta. It focuses on the transportation, distribution, and generation of energy, primarily in North America. With a market cap of $64.92 billion, their stock price on December 26, 2020 is $32.19. As of February this year, their stock dropped more than 25%. That is making them a perfectly discounted stock with a 52-week low of $22.57 and 52-week high of $43.15. Dividend yield is 8.13% with 7 years of dividend growth. This company is paying quarterly dividends. The company expects to continue this streak with a 3% dividend hike in 2021. Enbridge's diversified operations with fee-based cash flows set it up well for consistent growth. ABBV Incorporated. The pharmaceutical giant was spun off from Abbott Laboratories in 2013 and has increased its dividend every year since. ABBV counts as a dividend aristocrat given its 49-year streak of annual dividend increases from the time it was part of Abbott. In the third quarter, ABBV announced a 10.2% dividend raise. With a market cap of $182.236 billion, their stock price on December 26th of 2020 is $103.26. As of January 2018, stock dropped more than 16%, that is making them a perfectly discounted stock, with a 52-week low of $62.55 and 52-week high of $109.15. Dividend yield is 5.03% with 7 years of dividend growth. This company is paying quarterly dividends. ABBV has grown rapidly in the recent years thanks largely to Humira, its key immunosuppressive drug. ABBV's recent acquisition of Allergan, which added Botox and neurological drugs to its portfolio, should be another major growth driver. Allergan generated $16.1 billion worth of revenue in 2019. For the full year of 2020, ABBV projects Allergan to add 12% to its adjusted earnings per share. Walgreens. The company took a hit as COVID-19 fears led many people to get their prescriptions online, meaning they weren't coming in to shop in the rest of the store when they had to refill their medication. The worries about this trend intensified when Amazon.com said it would get into the pharmacy business. Walgreens' UK business has also been struggling. With a market cap of $34.228 billion, their stock price on December 26th of 2020 is $39.62. As of January this year, the stock dropped more than 33%. That is making them a perfectly discounted stock with a 52-week low of $33.36 and 52-week high of $59.78. Dividend yield is 4.69% with 43 years of dividend growth. This company is paying quarterly dividends. I believe that now, when we have the vaccine, the end of the dark tunnel is here. People will eventually shop like we used to, and this company will rise up once again. Unum Group. Unum Group is a Chattanooga, Tennessee-based Fortune 500 insurance company formerly known as Unum Provident. Unum Group was created by the 1999 merger of Unum Corporation and Provident Companies and comprises 3 distinct businesses: Unum US, Unum UK, and Colonial Life. With a market cap of $4.464 billion, their stock price on December 26th of 2020 is $21.92. As of February this year, the stock dropped more than 27%, that is making them a perfectly discounted stock with a 52-week low of $9.58 and 52-week high of $30.57. Dividend yield is 5.20% with 12 years of dividend growth. This company is paying quarterly dividends. Unum Group has entered an agreement with the life and annuity reinsurance firm Global Atlantic, wherein a subsidiary of Global Atlantic will reinsure a portion of Unum's closed individual disability insurance block business through a co-insurance arrangement. The block of business in question is backed by $8.5 billion in assets and $7.1 billion in reserves. This transaction adds to Unum's financial flexibility and further rebalances the company's portfolio to more capital-efficient businesses. Unum is definitely working in silence to boost their insurance market. If you made it till here, I want to say thank you all for everything. Check out our Pinterest page. The amount of engagement there is insane. Thank you for all the support. I spent hours to answer all your comments. If you guys want me to make more videos like this, just let me know in the comments below. Of course, don't forget to subscribe and join Robinhood to get a free stock. The link will be down below. So guys, happy holidays and I wish you a green 2021.